Hello? Hello? Trying to see the stream is on. Okay, there we go. Cool. It's laggy? It's still laggy? Okay, cool. Now I'm streaming to myself. I know that. I know that. Alright. So, yeah, it's just New York session. Currently, I'm just trading the overlap here. And it's currently 9:34. And I already put a position in on FDMO. As you can see here. Trying to reach 1 to 3 result ratio is around 1000, is around 2 R right now. I would like to wait for a little bit before closing out at 1 to 3. But essentially, I enter around here, which is setting my stop loss right a little above over there, a little bit later, but I suppose it still works out. This first trade over here is a 1 to 3. You can ride this trade down after it broke. And then another trade over here when price come back and retrace to 0.5. It happens to have a 1 minute OB neatly over there as well. And we are crashing down into the 5 minutes OB. Our entry is a little bit later, so that's why prices have been a little bit weird. So I'm gonna close out my trade in just a second once it reaches 1 to 3. Cool. So we have reached 1 to 3 result ratio for the day. As you can see here on the FCMO demo. Yesterday we have a little bit of manipulation on GU, and today we have a full 1 to 3. So a total just a little bit over 2R. Still, there's pretty much nothing there. So it's around 51. The profit is still ranging. I need to win one more 1 to 3, or just gain 3R, another 3R from the trade to get it back up and going. But essentially, you start the 550,000 demo to see what's going on. Just gonna test out the chat here. Okay, so you just send a chat message. Okay, cool. Yep. But yeah, essentially, I want to stream and just kind of be like myself, this is mostly for me. If people, any person catches this, then it is good. But at the same time, it's just for me, and for my archive, so I have something to fucking wake up and get going, mentality, and I train myself into thinking like that. But yeah, essentially, it's just mostly for myself. That's it. So we have a total of two trades, potential true trades today, but I only cashed this trade later on. This first trade here, let's go into 3 minutes. So from 3 minutes, you can see here that there are two zones, right? This one here, order block to the left, or the previous low to the left. So respect that previous low, price come up, right? This one here can be a little bit of retracement. Essentially, is we are in the 3 and 4 hour OB area, so we need to look out for a little bit of retracement. That's why this area here is after the transition, push back there, push back through. Yeah, 3 minutes here, kind of like a head and shoulders. This one retrace did not break through the wick on the 3 minute, but one going down to the 1 minute is a clear two candle, pretty strong two candle, indicating that's a little bit of a structure over there. And price broke through this one, continue back down. And what happens is again, you need to wait for the first candle to close within the order block area or the interest zone. Essentially, there's a 5 minutes right above that, so that's just the final destination or the second entry point, second interest zone. So just wait for the price you form a transition, a confirmation when there are multiple entry zones like this leg right here. This is a counter trend, but essentially price push up this candle here, push to the previous high, so this no longer is valid, right? This no longer is valid, and yeah, essentially price coming back up here once again, and then retrace, form a little bit of structure. Just wait. Even though price have broken through here, there's a chance that price may continue and having the strength to push through. But essentially, price remain around here, form a little bit of structure, broke to the 1 minute low, a temporarily low, going down here and basically respecting this low over here. I want price to come back and retrace around the area here. Um, but at the same time, it's around the area where it gather the sell side liquidity. It can push all the way through. It happens like this most of the time, anyways. After it broke through this low, it formed this 1 minute before it left, which thankfully that is one of the major signature of GU, as well as a trend break. We want to see this order block here, or just any sign of price slowing down, some sell side and buy side fighting each other. Right, so after it broke through, it formed this price come through, and then just form a clean order block. I marked the whole wick and the whole area here as the interest zone. And the reason behind it is because when price pushed through, this is imagine all this black candle, and you know this already, but imagine all these black candles are pushing through, right? It pushed this all the way through. A lot of sellers, right? Sellers are beating buyers. And when it comes back down here to this wick over here, buyers start coming into the market, right? They start buying into the market, which means that their stop loss, it has to be around lower here or a little bit lower all the way down here. But like regardless, their stop loss has to be below their entry point because they're buying in. While sellers, at the same time, at this level, now they want to beat the market. They want to continue pushing through, or make the smart money anyways. We are retail traders, so we just follow the herd. Um, but as sellers, we see this sign start coming into the market, but the trend wins over. So people are still selling in the market more than people are buying in. That's why this area here, a lot of buyers are stuck, right? They want to hold on to their position. So, which means that when the price retrace back and return back to their position or their entry point, they have to either get out or they can enter more or they can wait. But most you can see here they exit out of the position. That is why when we see price push through, maybe some have a lower stop loss, but when price retrace back to that position after seeing that it has been beaten, they get out of the position and then push price back down once again. That's why the order blocks area are so significant in a sense. That's pretty much it. So from that point on, you can see here, price coming back up to the interest zone, which is around the wick, and then we can enter here. Aim for 1 to 3 risk reward ratio. The first trade, 1 to 3. At the same time, it's the market. You don't know where it's going to want to go fully. That's the thing about the market. It's so wonderful at the same time. It's trying to test your greed, whether you want to aim higher or not. But essentially, you can see here, there's a gap, and there's a little bit of gap, but essentially the point 0.5 is all the way down here. It can decide to not retrace and continue to push through. That's the thing. So the trading strategy and revolving around it is that trade assigns. That's the first come first serve. All right. Imagine a buffet. I like anonyms. Imagine a buffet. If you go in first, all the good food are over there, right? All the good food are over there. They just prepped it. You can eat the nice food. But then after you eat all the nice food, people start coming in, or like the secondary people, they start coming in and they pick out what is left, what's nice, right? Of course there are, because the chef is always cooking, the buffet always cooking and putting out new food. But the first person coming in there, they can look at the initial condition of the market. They can look at the condition of the current dish, right? And they can get the best dish, the fresh dish, the warm, the hot dish, whatever it is. But yeah, the first come first serve market the same way. It's the same thing to every market as well. Real estate market, fucking car market, any market at all. Even supermarket, the same thing. First come first serve. You come first. You see a good fruit, you go pick it, right? Why the fuck not? So this is the same thing. The market is that it trains you to essentially just take the trigger, just pull the trigger. As long as you're the first one, if it does stop you out, then you can be the second serve. That should be fine. But yeah, if it misses out, then you convince yourself that, well, it is not what it is, and I should just better off waiting. Well, it works sometimes, but before that's how I am. Now I try to train myself to just see a sign and it can potentially push through and then retrace back again. Why not ride that initial push, right? Why not ride that initial push to a reasonable level, and then when price retrace back in again, we can be the secondary and go for another round. Why not do it like that? So this is one of the example over here, as I think it's pretty nice as well. So yeah, price coming back up once again to this area, and then E2 this wick. We can enter over there 103 risk reward ratio, and the psychology behind it is that 123 is a good area for a range. Imagine if you have money, right? Imagine if you have billions of dollars. The spread, even though you have connections, the spread will still be high, the commission will still be high. So your 1 to 3 risk reward ratio will might just turn out to be 1 to 2 or just 1 to 1.5, which in terms still wins the market, still wins the overall risk reward ratio. You never want to trade 1 to 1, right? So it may come out to 1 to 2 or 1 to 1.5 around the range, or even 1 to 1 in certain market condition. My bad. All right, my bad. But yeah, but in certain market conditions, the volumes aren't great. A spread may be higher, so it may be 1 to 1 to those smart money guys. But essentially, 1 to 3 is a retail level. As retail traders, we will take most of the profit out. So it's like around 2.9, 1 to 2.9 risk reward ratio, minusing the commission, of course. And that's another thing with high lot size commissions. That's just one thing you need to pay, anyways. But yeah, to a 1 to 3 risk reward ratio projected on the chart, it will only be like a 1 to 2.995. It will never be like a full 1 to 3. That's all. Yeah, 1 to 3 is just a good psychological level to take profit off. That's why sometimes you can see, or most of the times you can see on GU at 1 to 3, you will see some resistance if there is no structure or price have been retraced at a really good support or resistance level. It will start to retrace. People start getting out because it's the initial dish. They want to get out, so they're kind of leaving the footprint so that the others can push the price up once again. But yeah, essentially price coming up here, and then we can enter around here. Stop loss a little bit above this 1 minute OB. Price pushes through. Set a 1 to 3 risk reward ratio. You can set it at this wick here. This wick low did not yet reach, but essentially anywhere so that 1 to 3 is reached safely and surely. That's all. Yeah, that's a potential first trade. I think I took it on the paper trading on Trading View here. But essentially, you know, if what I'm trying to say again, essentially, if you take a trade and just take initiative, it will just translate into your actual trading, anyways. But yeah, you can see here. I took this is the account balance on the Trading View. I haven't adjusted that, so I'm still accustomed to trading 1 to 3 on 10 on the Trading View paper trading. But yeah, that's a 1 to 3 risk reward ratio. And for starters, right, 1 to 3, even if you lose a few, it should be fine, right? It should translate into something much bigger. 1 to 3, just imagine the possibilities, right? 1 to 3 risk reward ratio. You lose one, you still win. You still have 2R, right? Even if you start up the challenge a little bit, of a bad luck, and you lose one trade today, you lose another trade tomorrow, or you lose two trades today, and tomorrow you lose one trade, and the next trade you still lose. So that's 4R down. It can be mentally challenging. I know it can be mentally, challenging that it's not going your way. But as long as you backtest and continue to go forward, you know, those 1 to 3 will start to compound and basically give you the returns that you hope to get anyways. But yeah, after around 5 trade, if you lose 5 in a row, that's basically a no-no, right? If you lose 5 trades in a row, you can say, "Yo, sir," right? It can get more trades in that can potentially be buys. It can potentially be um, what is it? It can potentially be winners. Well, the chances are if you lose 5 trades already in a row and you win a 1 to 3 and you win again, the chances are it's going to be slim. So just go back and just reanalyze those 5 losses, what you have done wrong, what is it you need to adjust, and that's basically it, right? Just go back and reanalyze those 5 trades. If you see nothing is wrong and all the criteria matches up, then you should switch and just basically change your strategy a little bit so that it matches your preferences. But yeah, after 5 trades in a row and you still lose, it's time to go back and just basically reanalyze. So yeah, this one again, it's 1 to 3 risk reward ratio. I took it onto Trading View. The second one I put it on in the FTMO challenge. But yeah, this first one here, I think went over this in the last video recap already. It is basically manipulation. It's not really that great. It's just it's not really that awesome area of a level. But you can see here the commissions is a little bit hefty, $30, right? Volumes, it's just volumes anyways. Let's go for time again. It's just volumes. 10 basically one lot is $3, right? All round trips are 1.5 every single time you enter in. Commission when you exit, that's a total of $3. So here 10 lot size, which is around 5 pips stop loss. You need to pay $30 in commissions. That's why you only win if it's a pure 1 to 3 result ratio. It's going to be a 1,470, I believe, which is still relatively the same as 1 to 3, 1 to 2.9596. Around that area even more. But yeah, that's pretty much it for the trade that we want to take. 1 to 3 is just it, right? After this, we can just hang around. The most stressful thing about trading is probably the profit target, and just reaching your goals, I guess. But once you basically get it done, once you basically get it down, there isn't anything to be bragging about, honestly. And yeah, after you get it down, after you get the risk reward ratio for the day down and your your profit area, your what is it, your profit ticking down. I only have my take profit area or the profit target set at 1% a day. And if you think about it, 1% a day, right, for 4 days trading from Monday, Tuesday, Wednesday, and Thursday, that's 4%. 4% plus another 4% for another week, right? If it goes well, that means that in 2 weeks it will reach 8%. That passing the My Forex Fund challenge. Now, of course, the weekly profit target is going to be 4%, but at the same time, every single day we have a minimum 1 to 3 risk reward ratio. So even if we lose 2 trades after, we still have in within that range. So essentially, if you trade over and over and you win basically 30% of the time, or just a 50% of the time, you're beating the market, and that's a good statistics, right? That's good statistics, and it's just a good area to be around, but that can varies. Statistics varies, as well as the market conditions. So your strategy may not work right now according to the market. It may not work in the future. It may not work now. It may work in the future, or it works now, or it may be a little bit rusty in the future. You have to adjust and kind of trade with the market. That's why, all the courses out there, they teach you the fundamentals of the market. They teach you the fundamentals of how the market works and what you should look out for. Um, but essentially, it doesn't teach you. Nobody can teach you how to adapt with ones, right? For example, you are in a trade. For example, you are in like an actual trade, like plumbing, like welding, like electrician. If you're in those trades, they can teach you the basic fundamentals, but you're going to learn your own way of welding, your own way of plumbing, your own set of tools, and how you do it efficiently. But yeah, that's basically the same thing with trading. It takes experience, and you adapt to the market over time. The trader and the trade needs to be one, right? You need to adapt to the market and ride the market. The most Probably the most awesome skill that you can have in the market is to analyze the trend, right? To know where it's gonna go, um, and potentially where it's going to be. So, like I said, right now I'm not concerned about sharing my strategy because it should be fine. Um, Even if retail traders hop on, I'm still too small to even be noticed. Nobody's watching the stream right now. I'm talking to myself, but I'm not afraid of sharing the strategy right now because why not? At the same time, big money trade differently. So what we do at the retail level may or may not affect them. So, you know, I'm nowhere near that big money mark. So I'm not gonna be afraid to share my strategy. But yeah, that's pretty much it for the talk. But now back to the charts. I'm just waiting for it. But yeah, you can see over here that price coming back down once again, right? This is candle hint. So this is a wick coming back down, kind of retrace that. 30 minutes all the way down here, did not come all the way down, right? 15 minutes here, you can see here, this is a candle hint, where I say this is a wick, wick up. Basically, the goal of the market is to swallow and just basically get into this area, trying to swallow up the gap that it produced, the inefficiencies or the void, whatever you call it. Yeah, this is just a candle hint. I mark it there, so it marks like the beginning of the end. That's all. But yeah, 15 minutes down here, price did not push this all the way through. That's why you need to have certain area and take profit levels, right? Don't be too greedy because don't blame yourself either, okay? Don't blame yourself because your strategy works and then it doesn't. If it works and if you enter in the position inside of a profit area, that means it works. And it's go to 1 to 2, it goes to 1 to 2.5, it's still in profit, right? Don't blame yourself, right? The strategy works around your entry level, and then a few minutes after or a few seconds after, or once it reaches 1 to 1 ratio, that means that it works. It has the potential to work, right? The market, it moves in different ways. So if you study the market, then you know what your strategy is accustomed to. Mine is perfectly at 1 to 3. So when I take 1 to 3 off, I don't need to worry about where it goes, even though I have analyzed where it wants to go. Right, 50%. You can see here from the low to the high Fibonacci. Retrace down exactly at point 0.5 around here, broke to this low. Let's go to 5 minutes once again. But you can see here, this 5 minutes OB has been broken, right? It has been broken and basically having a lot of selling pressure pushing in, so it kind of broke through, which is fine, right? But essentially, price coming back down, it broke through there, and this has a lot of bear candle, and we don't see any structure to the left. So we want this to be broken. After that, it's broken, and we want to see a retracement back down once again. But so far, we haven't got that. So yeah, it's broke through the 5 minutes OB, so I wouldn't really suggest you guys to buy in the area because, well, it broke through the structure, right? It broke through structure on the 5 minutes OB. It broke through there, and then potentially it can continue down or it can reverse. If it reverses, then we need to look for a retracement, a second dish. Like I said, a second dish. At the same time, when price is really trending, you want to look for a good transition structure, right? If it goes down like this, for example, if it goes, bearish structure pushing price down, and it broke through a previous like a structure point, price is going to may continue and have a chance to continue retracement and then push through once again. What happens here that there's no structure to the left. So essentially this one here is just retracing in the middle of the void. And there are orders right here. You can see support resistance clearly on the chart. I don't trade support resistance that much. I don't trade area of support resistance like this much. I look for the wick, which is around here. But yeah, there's no wick up. So essentially, this is area here. People are selling in the orders, and then they push through just around here, and then continue to leave the zone. but there's no structure to break for this move to continue. That's just my criteria. That's just my way of trading. Yeah, essentially, even though it broke through over here, it just continue upside, retracement, and continue upside. So now we're just going to wait for a retracement down once again. Da-da. Oh, it's almost 10 o'clock. I mean, the market is just mostly waiting, right? Mostly waiting, but when the opportunity strikes, you gotta take it. If you wait for something good, then you gotta take it, make it worthwhile, instead of just waiting around. Essentially, this is still within the Lego structure. The Fibonacci is dynamic. It's really subjective. But I like to draw it if the Lego structure from the high to the low over here, if it's still within the range, right? You don't need to draw a new one. You don't need to draw a new one in the middle to try to see 50%. No, to try to see the minus 27, which is the projected area that I have set myself. You just need to see, hold on. You just need to see the point 0.5, right? Point 0.5 level, which is where price is, you're going to look for price retracement. Or if an order block, it wins over. But either way, it should be fine. It should be incorporating both areas in. I just draw Fibonacci in the middle. If there's a transition and price coming back up potentially to reach the premium price or discount it, I can basically see it as a confluence. But that's pretty much it. The overall Fibonacci and the overall take profit is still within the big leg, right? This big leg from the high to the low here, right? And after this price push through, right, this can be here aiming at minus 27, but 1 to 3 is the first trade. So essentially, this one is a little bit abandoned. The second one, however, after it broke through the previous low or it broke through the previous high, meaning it make a new high, that is going to be another leg of structure. That's a new leg of structure. So that's why this Fibonacci from the high pushes down to the low. It's over here. So we're looking for a point 0.5 Fibonacci retracement. So price coming back up to 0.5 over there. And then basically enter in and then push the price down to minus 27, which of course it reaches. It reaches over there to minus 27. And yeah, that's pretty much it. Minus 20. Man, I hate this fucking weather. Huh. Yeah, price pushes through to minus 27, which is where we projected it. But essentially, Fibonacci wise, I draw it when there is a new high or a new low. That's the overall area I will draw it, and then look for minus 27 as the take profit area. But right now, price left the zone. There aren't much to look out for. And you can argue here, well, this area here, you can enter in and then take this order block area and then ride the price all the way up. Well, it doesn't meet criteria. It doesn't meet anything at all, honestly. It can continue upside and downside. I don't really look at this as like a missing out opportunity because it doesn't match up as with my trading strategy. It doesn't match up with anything. But yeah, it doesn't match up with anything that stands true to my strategy. That's why I did not see that as the missed opportunity. For example, this one here, if I were to miss this one, then that will be like a missed opportunity. This one here should be a missed opportunity because it has matches up with the major area of breaker structure and break through the trend over here. And it may give us an order block. This one here, retracement to the 50%, stop loss and continue down. This one is just a live trade over here, but essentially you would wait for this to basically coming in and basically stop around there. First candle closes in the second candle closes just like that. Essentially, this is the area I want to optimally get it One, two, three. So this is the optimal area I want to take a trade in. Again, at that interest level. And then, yeah, that's pretty much it. This is the area where I want to see price retrace and maintain that level essentially. I would wait for the third candle to close and then enter around there. That's why sometimes my take profit is going to be a little bit wider. But this is the good level. This is the projected trade, which is the 1 to 5 risk reward ratio. Is a lot better. But yeah, we'll try to back test more on this and to see how the candle hints and how it can potentially work around that. So we have a bigger risk reward ratio as well as better entries, just optimal entries, I guess. The price come down here around 5 minutes. Five pushes up, break through the previous high. Right now, we're just going to wait for a good confirmation, a good price retracement. That's pretty much it. We marked out the 15. Now I know there's a lot of stuff on the chart because I have not gotten to backtest. I have not gotten to recapping all the previous session because I have overtime last weekend. Today's Thursday, I believe. It's Thursday. Yep, it is Thursday, December 8th. Tomorrow's Friday. No training tomorrow. Just recording psychology tomorrow. To recap the trades, recap what we have done for the week, and yeah, I guess I will basically be in a recording or streaming. I'll decide tomorrow. But essentially today is the last trading day. See how it goes, and then Saturday, Sunday we're off, and yeah, we will take it from there. That's pretty much it. Good life, good life. Like for those of you who are trying to look at the market as a way of to make quick money, to make money as soon as possible, or just turn $100 to $1,000 or stuff like that, you can do it. But those people who are doing it already know how to trade. I can do it now, and I can guarantee you I can look for a really sniper entry which will work, which will or may not work, right? If it doesn't work, then I just lose at most $100. If it does work and the stop loss is so cool that my margin allows it to have a very little bit of wiggle room, and it pushed all the way through to a 1 to 10, 1 to 20 risk reward ratio, boom, it's just suddenly a 1K or 2K account, right? You can do that. You can aim back and forth. You can just do that over and over again until you aim for it, right? Just like a sniper. You snipe all the fucking shots you want, right? If it doesn't work out, then it doesn't work out. But you're not that experienced. An experienced sniper will know what to look for. They're going to know what to look for, how the environment is going, how the wind is kind of pulling, right? They can read the atmosphere. That's like experienced trader, and they know how to trade. But when starting out, do not look at it like that. If I give you a sniper right now, right, that has $100, which is like one bullet in there, what are the chances of you getting a right area or just reading the atmosphere enough and the condition allows so you can basically shoot, surely, right? Uh, but yeah, I think I got this category in education, and I always keep it in education. I think it's educational as well. It's for, studying purposes. All right, just gotta go to pee a little. We are back. It's already been 36 minutes. Wow. Whoa, so yeah, I guess for streaming, I get now streamers have so many monitors. One to basically run the stream, one to have their monitor on something, and the other one is for OBS for their streaming software. Um, okay. Man, the chat over here. I don't know how to set up the chat so it looks cool. Or it looks better, I guess. You can see the chat. Yeah, this is how it works. This is I'm new to this, but I guess my PC, my laptop is pretty good. Like I am pretty proud for this laptop to run this much fucking shit at the same time. But yeah, this is basically a chat, and you can do it on OBS. You can do it on the chat on the YouTube as well. But I like doing it on the OBS just because it has a good area for it to a good. I just say fucking. There's a good area for it to be in, and yeah, it's kind of incorporate everything in together. And YouTube Studio is just for views, just for like statistics and how many people views it. And old time, there's nothing. A chat rate, I just put my own chat in there. There's no views. There is no concurrent viewers. Nothing, honestly. But yeah, it says stream health. Stream is healthy. Okay, stream is healthy. Okay, cool. Stream settings, stream key. Uh, yeah, all this stuff. But I guess they have made it really simple for the streamer. Really simple for us to broadcast it, I guess. But yeah, so again, it's currently 10:12. I'm gonna stream to a little bit later, to see if anything else is going on. I'll still just keep it around for 2 hours. I stream from 9 to 11. Maybe Thursday. I may incorporate this in the future, see how it goes. But yeah, I will do this every day for 2 hours. Most of the time is going to be talking shit. Um, but sometimes, there will be a little bit of reflection, but there are live trades on the charts over here. It's completely free. Live trades on the charts, and yeah, it's going to be a lot of waiting as well, as everybody knows about trading. You need to wait for certain stuff to happen. Yeah, it's just waiting. I mean, from this point on, it's pretty much silence. There's really much going on here. Price have broken through previous highs. They are looking for a retracement downside once again. 3. As you grow, as I grow as a trader, I see that it's mostly dynamic, right? All the levels are really dynamic. Is there aren't really that many levels that you cannot be really precise because the market itself, the prices, all the candlesticks, all the chart data, it is really subjective, and it depends on your broker and how they use the data to match it up. That's why I like TradingView. TradingView incorporate the currency.com. That's probably one of the more accurate trading platform or trading brokers. I don't know if it's a broker or not, but currency.com. Let's just go up. Uh, Not currency.com. No, this one over here. FXCM. I use FXCM. I think it's like one of the more popular broker, more popular, a currency broker. Even on FDMO itself, I mean, right? Even on FDMO itself, the candlestick chart is not going to be precise. I only use this for trading terminal, but for charting and for stuff on the charts, I would say the stuff on the charts are on TradingView. FXCM is probably more precise. But yeah, again, TradingView is just a trading terminal, just like any prop firm. You analyze on TradingView, and I like TradingView because it's so seamless. You can just easily access everything, right? Easily do everything here on the chart and draw all the trend lines, all the Fibonacci's to one without really restricting and hard to access. Unlike meta traders, the platform is pretty old already. But yeah, I like TradingView just because of the modern experience that it gave. Pretty cool. So yeah, now nothing else is going on. You see here 5 minutes being broken. Not really, not really. 5 minutes still maintain, I guess. Do do do. Go to the line chart. Nothing else too much going on. This one here, see if it's broken. Nope, still maintain that low. 5 minutes still being maintained. 3 minutes still being maintained. And if we see broke through this one over here, and we may or may not see a good level to right price back down once again. Let's go ahead and zoom this back. And we have broken through, which is nice. Essentially, we only going to look for breaking structure always anyways, and like a good transition for us to just get in the trade. And you can see here, price barely wick through, which is cool. I mean, it broke through. It's just wick through like 1 point, but that still counts. 1 or 2 points, that still counts. And Fibonacci, Fibonacci 0.5. See anywhere here? Matches up, but it's really not that clear of a structure area for me to basically aim for it. Not a good clear area, I would say, and we are still overly bullish, which means that we need to be more caution in terms of entering a trade up here. Much more cautious. So let's just project the trade. I'm not going to enter. I'm just going to project the trade here, see if a stop loss level is reasonable. So 6.7 and then minus 27 down here. Nope. Let's see the 0.5. However, 0.5 on the high to the low. This one over here is around in the middle. Price has been swallowing up. Let's go to there. 5 minutes. Yeah, we have something, but not that great. We have something, but not that great. And that's a candle hint right there. Yeah, I don't want it to break the structure at the same time. We still have a big way, a large way to go. I still wanted to match this up with the Fibonacci. That's like how just as how my strategy works. This is how just how I trade. So it may or may not work for other people, but to me this works. So I'm gonna stick to it. Essentially, they broke over here, so we want to look for an optimal entry. 70.5 people say is the optimal entry point, or a good area to enter. I would say too as well. I would say so as well because it is basically matches 1 to 3 result ratio. It matches perfectly with minus 27 as well. So I like 70.5. It's just a really good low key level to aim for, I guess. And let's mark this up here. Let's wait for it. I mean, now it's just waiting, see how it goes. And projected trade is all the way down here in the minus 27. See how it goes and touches all the way up there. Let me drag this out a little bit. May or may not enter. See how it goes first. See how the signs. Candlesticks. Anyway. Eh. Yep, still waiting. One thing to keep in mind, on the right here, you can see the 15-minute time frame, and I marked a 15-minute order block up. This may potentially be a bullish 15-minute order block, even though it has 9 minutes to go. It has 9 minutes to go. It may or may not be. At the same time, it may or may not be, a bullish order block, but this bearish order block, a bearish candle just closed before, so there's a potential. That's all I'm gonna say. 5 minutes still being respected. 3 minutes, nothing else. Yeah, over this area, this is the only trade that I'm looking at right now. Um, see how it goes. See how it retrace up there. Respect price and push through to minus 27 again. We still have a big way to go down here. I mean, it's pretty large void the price can fill, and it's a second entry on the second trade of the day. So I wouldn't really be too strict on the take profit level. Yes, 10:21. Already stream 47 minutes. Yeah, not exactly at 9, but I was trying to see how it goes around. I thought it's gonna be simpler, but yeah, streaming you need to set up all the settings and shit. But I already got the settings up, so that should be fine. Settings up, so I am a little bit late on streaming. I think 47 minus 22. That's 25. 25, right? Yeah, 25 minus, so that's around 8:35. I got on at 8:35. Really? I got on 8:35? 9, no, no, 9:35. Oh yeah, 9:35. Okay. So around 9:30, a little bit later, to set up all the trades. So it'll set up all the those settings first time. But yeah, from this point on, I think it's gonna be pretty seamless. I just want to set up and go around with the settings a little bit. Okay, so price is approaching a level. It's approaching the level. See how it goes. Touch the 1 minute OB. See the candle closes. You can see here, price touches the candle. Candle closes. See how this candle reacts. May or may not. Pushes down pretty nice. We have the doji area here as well. You can see a large portion of people are getting their orders set right here. Pending orders or market orders over here. As you may or may not know, market execution is the way to go. Market execution is what drives the markets. Imagine all the pending orders, everybody doing pending orders, everybody doing limit orders, stop orders. People are like big bangs and brokers are going to see it. At market execution, they don't know what you're looking for, right? As soon as you press it, they have a fill or kill. So we have that candle being swallowed up. And what's over here? Price continue to push through. Like I said, I want to see a reaction between all the candles because it at the minus 79, which is a little bit too deep into the Fibonacci level. I want to see a good level that price can retrace here. And as you can see on the left, like I said, it can potentially be a bullish order block forming from the 15-minute time frame. So there's no guarantee that it's gonna continue to maintain the level. This one here is just a little bit of a wick, right? May or may not actually respect it, but around this minus 179 level is a little bit bigger. So price is reacting pretty nice to this. See how this one closes. Let's trade here on the paper trading. 125, and there we go. This is a 50K. Price rates are reacting good, but we have some bullish order block, which is not that great. There is a 1 minute bullish order block over there, so it is trying to put in buy orders. Buy side liquidity is trying to come in, and trying to push price above this level here, which very likely going to happen because this 15-minute order block, like I said, is going to be a fundamental building block of the market. Even though it has not formed just yet, in 4 minutes it will. but what are the chances of it pushing back down? So that's why I need to be really cautious about this because we are extremely bullish, and this sign here is not that great. So see how price reacted to this, right? So we just need to look for a good like even area out. I don't want to see that candle, right? That white candle just okay. Now that is a good balance, right? This is a good balance between the buyer and sellers, but there is still a chance that it's not gonna be that great anytime for long. So let's just drag it down to 5 stop loss, and you can see here it did not match anymore. So essentially, this is an area one we want to take an entry from. If it pushes past, then so be it. But yeah, you can see here what are good signs and what are not. It varies. It's again a market is subjective, but you generally don't want to look at the price and seeing buying and selling pressure both coming in from two sides of the market, right? These are the order blocks, and you don't want to see this sign because sellers coming in and the buyers are kind of beating them, right? So here you can see price come all the way up to previous daily high. Chances are it's not gonna remain in this level for long. I'm gonna just not gonna take a trade anymore. It's a projected trade and now it's deleted. So it's just another example of setups and when to take a setup or not. But essentially, you can see here this sign, even though that is a wick through, body did not close through, but essentially this is a wick, and I take that as a structure level has been breached. At the same time, price come up here, respect the level, not that great. So here, all this buying pressure coming in. Essentially, this one here, this doji means that price have been balanced out. So at this level over here, buyers and sellers are losing. Sellers are losing interest. Buyers are coming into the market because there are, they fighting back and forth, and the result is a little bit of a draw. So price continue pushing up. After that, the bull basically take the lead, come back up here, and then people start selling in. Like I said, that's why I want to see a good structure area before I enter in the market. Essentially, in deep within a Fibonacci, right? That's a really deep area within a Fibonacci that's dynamic. 70.5 around 0.79 at the same time. It's pretty high at this area here, and at the same time, price is retracing and it's extremely bullish, and I wouldn't really like coming into the market that way. So I want to look for candle reaction. This candle here did not close within, but it's closes wick through a little bit, meaning that selling pressure start coming into the market. You see, as the next candle, people are starting to sell more because this candle gives that the sign. Price pushes through, coming back down to the doji here, and basically fighting back and forth. And so this candle closes, and what it's basically want to say to us is that buyers are coming in, even though there are sellers pushing price here all the way down to this low. Buyers take over and then pushes up and win over half the time. Price coming like up here, closes it, but essentially, this next candle is the bull candle. It opens here. That means that the bull starts up and pushes it up to the highest high, right? And then the seller is coming into the market, pushing in down in the middle, but it still closes the bull. So it favors the trend, in which case it is favoring the bull. So next candle, you can see here it formed like order block. It did not reach through previous open high or both open low. Open high or no, sorry, open low, and then which in the candles bodies, right? And after this candle closes, I'm okay. I will say that yeah, it's not really a good area because the bear is not really winning over. And what happens that next candle over? I would want to hope for price to just basically close and pushes all the way through, saying that the bear is coming in. Well, it does the complete opposite, and they continue pushing all the way to the upside and higher and higher. So this area here, if you haven't got out already, just gotten out. I did not take the trade because it just does not see fit. This area here continued. Oh, the wick, right? You see on the wicks as well. The wicks coming up, and just basically push through, right? Higher and higher and higher wick. So that means that buyers are coming in and try to win through. So yeah, that's pretty much it. And price have broken through the previous high as well. So it formed the all-time high, not all-time high, but like it formed a new high. That's all. And again, point 0.5 still the same area. Let's go down. And as you can see here, 15-minute order block just formed. Like I said, that's another confluence you need to look out for as well. The 15-minute order blocks and the formation of it, in between, within the order blocks, you need to look out for that too. Because sometimes, even though it is being formed, chances are if it pushes up like that, which extremely bearish or bullish structure, it will form the order block um, in which case, if it comes down and pushes through, the signs are over here. So everything confluence with each other, but this is another confluence that's saying the bullish order block is going to be formed. So yeah, we have a 15-minute OB sitting right here. So now price is, we're going to see price coming back down to at least a 50% or to this 15-minute order block. We're at 10:30, 10:31 right now. So we may or may not have another opportunity. But that previous one was not that great because the price keep pushing up even higher and higher. Not that great. Essentially here, this candle here is signifying that's basically make me disappetized, right? It's just not appalling anymore because if this candle closes all the way down and it's winning over, then that means that selling pressures are coming in. But you can see here, buying pressure coming in pushes past 50%. Some people will say and teaches this. Some people will teach this as something you look out for, and over time in the market, as you experience, you will see this as well. But that's just one of the fundamental areas. It doesn't really signify too much, and this just comes out to experience and backtesting. That's all. But just look out for this. If it pushes all the way up like this in the trending market, in which case it's a bullish market, and there's a bear candle, and then the bull basically pushes half 50% and all the way upside, meaning that buying pressure is still really high. You shouldn't really get in. So now we just wait for this. This is the smaller Fibonacci area, 50% still down here, waiting for the 5 minutes. So it matches up 50 at the 15-minute order block nicely. I'm not gonna do anything here, just gonna wait for price. Yeah, so this period is just a period of silence. Not gonna do that much anymore. Just gonna wait around and see how it goes. Yep, it's just a period of waiting and waiting and waiting. I mean, it's live. I don't know why the YouTube thing is not really doing that great here. I know I'm talking by myself, but it's live over an hour. Stream health is still good. Cool. We're just waiting for Price to do his thing. See if it's suitable or not. And price left the zone pretty high after it broke through the previous high, just left all the way up. Okay, let's see the news, if we have any news here. I doubt there is. Yeah, employment claims, not that great. Pretty much expected. Nothing else going on. Yeah, there isn't any big news going on. This push here is just after the breaker structure broke through the previous high. And let's look to the left to see if there's any void that is going to fill. And there is one void over here onto the left. But essentially, that's just how the market works. Nothing else, just forming structure. Nothing else to look out for, honestly. So just keep dragging the high. Yep, just waiting for it. 15 minutes OB on the left. Try to retrace back down. It comes down to the 15 minutes OB. Waiting for the conditions here. May or may not push through. 50% is down here. So we'll see how this order block holds up. It's holding up. One candle has not been penetrated. Holding up pretty nicely. You even have a doji on the 1 minute. Cool. Seems like it's holding up pretty well. Let's see if it wants some structure or not. Still being resisted. Cool. But it's too volatile at the moment. It's 1047. It's not so good anymore. It's on the verge of breaking through. And it got through. Okay. Now 15-minute has been broken. Finally, a little bit of action. Like I said, mostly just waiting around. And 15 minutes, another one down here. This one is more plausible. 5 as well. 3, 1. Yep. Let's just wait for it. Just broke to the 1 minute OB. Seems like we're having a good structure here. Continuation. We have 15 minutes all the way down here. May or may not see it. There's 8 more minutes. Let's see how it goes. Just want to see how this session closed out to be. But this is a good level here. So, yeah, just keep an eye out on it. Seems like we have a bit of reaction at 0.62. Not that much though. Potentially maybe retracement. Let's track it down here. 0.5. Let's see if, no, nothing on the 5. Something on the 3. Still, we still have 6 minutes left. See how it goes. Around the zone, around the zone. Five minutes. Seems like that's pretty much it for this session. It may potentially come down here, or may not, but in the next few minutes, I wouldn't really say that it's gonna be that optimistic. It already within the premium price. The chance of it staying up here a little bit, maybe, maybe not. And Fibonacci from the high to the low. Yeah, 0.5 is all the way up here. Yeah, let's just sit around for the end of the session till 11 and see how it goes. Three more minutes. And I guess that's pretty much it. Yeah. Yep, that's pretty much it for the day. One more minute. I wouldn't expect too much going on. There are some structure forming, so we may see this as a shoulder. We may see this as a shoulder right here. And price continue to push down. So it has two long shoulders here. Yeah, we may see price push down here, maybe a little bit of structure here and there, and can break through here. Maybe retrace back down, or can continue to break through this high, and then come back down again, or just basically around there. Hopefully, maybe not, but essentially it's 11. So that's pretty much it. And yeah, with that said, I'll see you tomorrow. Maybe a stream or maybe just a small talk video, and just back testing all of the recapping all of the trades in the session so far. Yep, end stream. Let me just put here end stream at 11. Cool. See you tomorrow.